In today's video, we're talking about the pound GBPUSD as it finally starts to break out, potentially, and also the DXY breaking lower towards some of those targets that we've talked about in recent videos. So I have all the details in today's video, guys, including key levels to watch, also some potential targets as we move into some market moving events this week. All right, guys, so the pound GBPUSD daily time frame. So what we discussed in recent videos was obviously that the market has been very range bound here over the past really few months. And so right now, 1.3580 is going to be the level to watch going into this week's events. Now, before we get too far into this analysis, I do want to mention that this week, okay, in terms of events, if we take a look at the Forex Factory calendar, this week has a lot more going on, guys, than previous weeks. And just to show you, if you look at previous weeks, you can see how limited the event calendar was. And this is part of the reason why we've seen the Forex market just kind of going sideways a lot recently, not a lot of action, not a lot of quality setups out there. However, again, when you compare that to this week, we have a lot more going on. I mean, basically twice the amount of events, of high impact events going on this week compared to last week. So key events, guys, for the pound here, if we take the filter here on Forex Factory and just select GBP and USD. Okay, so let's take a look at this here. And you can see on Wednesday, we do have that FOMC, the rate decision, and also press conference. So that's obviously going to be a big one. Markets are starting to price in some of that, the rate cut there on Wednesday. So we'll see if the Fed comes through with that. Most likely they will. And then on Thursday, we have a rate decision out of the UK. Okay, so basically Wednesday and Thursday, guys, this is going to be the period of time here to watch for GBPUSD. Of course, we have US retail sales here as well. However, these, are often not really big market movers, at least not compared to something like the Fed rate decision or the rate decision out of the UK. All right, so that is what to watch for this week as far as the events, guys. Again, I think that this week, if you look at just across the board, this week is going to be a lot more volatile than last week. At least that's how the calendar is shaping up so far. Okay, so let's switch back here to the pound and talk about this a little bit more, because what it's going to take for the pound to really break out is going to be a daily close above this mark. Because what you don't want to do is try to buy on a move, a wick above here, because you can see back here, we got the same thing, right? Even back here, the pound actually wicked above this. So what you need to have happen here for the pound is to get a daily close, a sustained break, as I often call it, on the high time frames above here. Now, as far as how far above 135.80, because what traders do sometimes, and they get caught in this, is they'll look here at this level and they'll say, okay, if the market closes a few pips above this, then that confirms a breakout. And that's really not the way it works, guys. What I want to see is something very convincing here. And you can see ever since tagging this poor high up here at 136.18, which we've also talked about in recent videos, because this right here was an unfinished auction from this high right back here. And again, we've talked about this 136.18 level before, and it's no coincidence that the market tagged this level here today on Monday and is so far selling off. So what I want to see from the pound to really convince me that this market has broken out from 1.3580 is a daily close in the upper half of this range. So today's range so far, you can see the high, the low, and basically you have the market trading right there around the midpoint. So what you want to see is the market close somewhere up here. You want to see it close in the upper half of this range to really convince you, or at least me, that this market has broken out. Because if we close right where we are right now, you still got this high back here and also this one. Okay, so really this is an area of resistance. You want to see the market really confirm this breakout with a close in the upper half of this range, clearing some of these highs from back here. Okay, so don't get caught off sides here. Don't get caught, looking for a close above this level by just a few pips. What you want to see is something very convincing here from GBPUSD. Now, as far as where this market could target if we do get that sustained break, and by the way, guys, before we go on, be sure to join us in VIP if you want my help with your trading, including seeing my trades live, also VIP-only videos, daily trade setups, real-time market updates, and Discord, also full access to the course. Check out that link in the description of this video for 85% off lifetime access to our Discord group. If you're on the website, click on that join VIP link. All right, so where could this market target if we finally get the breakout here from GBPUSD above 1.3580? So obviously this was the first target, which we're seeing come into pressure here on Monday. That did get taken out with this high. So from here, if we get that sustained break, again, has to be in the upper half of this range to really get that sustained break above some of these highs back here. If we get that though, this area flips to new support. And you've got areas like this back here. Okay, so this entire pocket here for GBPUSD, really between 136.85 or so, all the way up toward about 137.30. This from back here in July, we've discussed this before, but there are several imbalances back here from July. So if we take a look at the 30-minute time frame, because this is kind of the industry standard when you're looking at TPO. So looking at these single prints back here, also called imbalances, you can see what happened for the pound back here. Very aggressive sell-off. We got a partial retrace into this area. However, following this expansion out of this range right here, you can see we had this imbalance right there at 136.86. And then you've got two more up here. Same principle. You've got this sideways range, breakout from that range, impulse to the downside. And then you've got these imbalances up there toward that expansion. Okay, so again, this entire pocket up here for the pound could become really interesting if we do get that bullish breakout. But again, the market has to confirm this, guys. I don't want you walking away from this video thinking that I'm overly bullish right now, because again, the market has to confirm this and really prove it to me that buyers can take out this level and close above here, okay, and flip this area to new support. So until that time, you've got to be a little bit cautious here, a little skeptical of what we are seeing here today. And again, we do have that FOMC on Wednesday and also the UK rate decision on Thursday, so keep that in mind. All right, guys, looking at the DXY now, we have the market last week closing below 97.70. And also, guys, be sure to subscribe to the channel and also hit that like button if this commentary is helping you, because it does help out these videos and I always appreciate it. All right, looking at the DXY here, this was a significant or potentially significant close last week for the DXY because it finally put the market below 97.70 on a weekly closing basis. So what you'll notice is that, the daily time frame is chopped around this level for weeks now. However, the weekly chart, you can see obviously very sideways, but the market is held above 97.70 every single week. And last week did close below this. So if you take a look here, no coincidence that so far this week, we did get a sell-off right there from 97.70. Okay, so we got the close below. This right now is resistance. So what we're looking at here for the DXY, if we go toward the monthly time frame, and we have talked about this many, many times, really for months now, you can see that the DXY has been moving within this ascending channel ever since 2011. So we've got these lows back here and these lows here recently. So one scenario that I'm eyeing going into FOMC is if we were to see, like if we move in here, you can see where the DXY so far for the past few months has been very sideways. And this is kind of in line with what we've seen here at this level in recent years. I mean, for the past decade plus, every time the DXY has bottomed from here, it has gone sideways for several months. So this is kind of normal behavior for the DXY if it is going to bottom down here. And this is what we called for a couple months ago, saying that the market could just be going sideways here for a few months. And that's exactly what we've seen. So looking at the daily chart, guys, again, obviously very sideways here recently, but you've got these two poor lows, these unfinished auctions from back here in this area. And those line up right there around that 2011 channel support. Now, if we look at the weekly time frame, and I discussed this in the weekly forecast too on Saturday, or actually this time it was on Friday, looking here at this lower wick from back here. Okay, so weekly time frame, this lower wick, you've got these poor lows down here. Okay, these are unfinished auctions again off of that 30-minute time frame. So looking at the weekly, you've got this lower wick down here, which a lot of times, guys, lower wicks like this do get filled in, or at least partially. And I would be willing to bet, and I promise you, I haven't done this yet, but I would be willing to bet that these lows right here, this area, is probably pretty close to the 50% of this lower wick, just because that's kind of how it looks here. And what you'll notice, and again, guys, I promise you, I have not done this yet. This is the first time I'm doing it, just because it doesn't matter a whole lot. All I need to know is that we've got these poor lows down here. We've also got the bottom of that 2011 channel. But what you'll notice here is that using the Fibonacci tool, if you look here at this lower wick on the weekly time frame, okay, so from this right here, from that close down here to the low, if you take your fibs, what you're going to notice is that the 50% and the 618 fib, okay, 50% is technically not a Fibonacci level, but markets often target these areas. You can see that these line up pretty close, guys, with those unfinished auctions at 96.62 and 96.69. So these areas, guys, are going to be ones to watch here for the DXY if we get that continued move lower. Now, one thing that could derail this, okay, if we don't get the move down there, is looking at the recent price action, and I am by no means saying that I'm bullish on this market, because I'm not. But looking at the daily chart, though, you can see where, if you look at the angle of attack here recently over the past year or so, okay, so let's map out some significant legs that we've seen from the DXY, going back here to the high from 2025, which really occurred back here in January. And what you'll notice is that if we just map this out here, I'm going to highlight these so you can see exactly what I'm referring to, is that the DXY really recently has started to have a lesser angle of attack. And what I mean by that is if you look here at this price action back here, I'm going to actually draw this. Hopefully I can draw some straight lines for you guys, but from this high back here, down here to this low, right? You've got this angle of attack that was very steep. From this high back here, down here to the low, you've got this angle, right? So both of these are pretty steep, almost in line with one another. Now, what you've seen here recently, though, obviously you had this big drop back here, but really the price action ever since August, the start of August back here, what you'll notice is that the angle of attack is much, much less than what we've seen recently, okay? So back here, a lot of conviction behind these moves. Even back here, conviction behind these moves. However, recently, since the start of August, what we've seen is a lack of conviction from this market. Now, a lot of that could be due to the upcoming rate decision from the Fed, but the bottom line here is that as the DXY, okay, starts to bottom here from that 2011 channel, you've seen these angles of attack become less and less, okay? And so what that means is that there's more of an equilibrium between supply and demand. So the point here being that if the DXY is going to bottom, over the coming weeks and months, then the area down here around 96.60, 96.70, this is going to be the one to watch in my opinion, okay? So this down here, guys, going into FOMC, this is going to be the one to watch. I know I'm spending a lot of time on this, but it's going to be significant because we do have that Fed rate decision on Wednesday. So what I'm looking for is if the DXY, if the US dollar continues to slide lower here going into FOMC or even during FOMC, this is going to be the pocket to watch, because if markets get ahead of themselves, markets are forward looking, keep that in mind. If the DXY continues to price in that rate cut and the market comes down here and tags this area going into FOMC, there is a good chance, if we see this, that the DXY does bounce from here. Now, I'm not saying it's going to be the bottom for the DXY, okay, but it could serve as a significant point of demand and to get that bounce from this region down here, okay? So when we're looking at the pound, knowing what we know now about the DXY, right, knowing that this is going to be a significant area, my bet is that this area, if we do see the bullish breakout from the pound this week going into Wednesday and Thursday's events, then this area up here, guys, is going to be a significant reaction area for the pound, okay? Up there around 137, maybe just above, because this up here probably lines up with the DXY down there around 96.60, 96.70, all right? So that is it for today, guys. Again, keep an eye on 1.3580 as we go into today's close. What you want to see is the market closing in the upper half of this range. You want to see it closing above highs like this back here to really convince you that the market has broken out, flip this back to support, and target that 137 area. If it can't do that and it slides lower below this level and also below 135.40, then we could be looking at a lower pound. But for now, guys, it does look relatively bullish, but again, stay cautious out there, wait for the daily close, and keep an eye on those events on Wednesday and Thursday. All right, guys, I hope the video has helped. If it has, be sure to subscribe to the channel, hit that like button, join us in VIP, check out the link in the description of this video for 85% off, or if you're on the website, click on that join VIP link. Trade well, and I will talk to you again tomorrow.